Hey, yo, it's Tuesday, March 19th, 2019. Let me remind you that trading's risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Let's go! Oops. There we go. Hey, guten Morgen, guten Morgen. How are you doing? Right? Good morning, how are you doing? Kazakhstan has the best potassium. Oh, what a life, huh? You like being a currency trader? Woo-hoo-hoo-hoo. Non-stop coming at you like a wild cat. Anyways, good to see you. Hey, my name is Wayne McDonald. I'm Chief FX Market Strategist for TradersWay.com. Thank you for coming into my office today. Everyone gather around. Let's go through the markets. We'll look at technical and fundamental analysis, but we'll look for opportunities and threats. Peter S. first time live. Peter Rama. Sure Trade says introducing a PP wizard, master of swing, the light of the Forex world. Oh, well, may the pips be with you, Sure Trade. Durban, South Africa, nice. I know people from Durban. Cool. But what else we got to cover? How to survive the game called Forex. I'm telling you, if you don't have plans ahead of time, the reason for it is you're not going to have any control or consistency if you don't have trade plans. But like if you're trading something with like the pound that is obviously sensitive to Brexit, anything can change the market. She said this, he said that, boom, big changes. Having a lack of plan, I'll put it this way, having a solid plan will tell you when the market's changed and when to stop buying and start selling, or stop selling, start buying, or at least run away, all that kind of stuff. So I hope over time I can teach you how to trade plan properly to manage your risk and identify opportunities. So please ask questions, get involved. Please give me feedback. Leave comments, leave thumbs ups. Speaking about thumbs up, in the video description below the YouTube video, there's a link to download all my chart templates, so you can have all those chart templates. They're going to be useless if you don't have MT4, so go to TradersWay.com, open up a demo account, take you less than 30 seconds, download MT4, install my charts. There's even a video that tells you how to do it. Now you have what I have. That's a great starting point, right? Because if you're fairly new to trading, fairly new to Forex, fairly new to whatever, if you probably think, I want what that guy has. See that? That's what I want. That's what I want. So I give that to you for free. Although probably within a week, my programmer got sick, but he's back on it. So probably within a week, those free chart downloads are going to be cost money, like $7 or something. But still, if you want them free, get them now. Is that a Russian accent? No, they're not real accents. I was kind of doing a Borat. Kazakh potassium, #1. Armenian potassium. So I don't know what that accent is. Anyways. Peter wants to know if trading robots are the future. Well, for most people, like, are you talking about currency trading and EAs and stuff? Look, they're helpful tools like any other thing that you can plug into MT4. But how about the bigger thing like robo advisors and stuff? Most people with, let's say, a net worth less than 10 million don't need a wealth advisor. Now, this is crazy, right? Because we're talking that would put probably 1 million people making $300,000 a year out of a job, but they don't really do anything. You know, life gets a little more complicated when you cross the 10M level, and you probably need a wealth advisor because you need someone to actually protect that. So anyway, so like I think that industry could truly go robo, but then there's probably going to be a black swan event, right, where suddenly a robo advisor short sells everyone's 401k, and there's a big fallout to that. I don't know. But as for trading, put it this way: why don't you ask someone to invest $100 million with your robot? Try it. See if we're ready yet. Is it the future? Yeah, maybe it's the future, but I think people like doing it. Do you know? This is old data, but you know, if you took the top 100 highest paid Fortune 500 CEOs. You take the top 100, the highest paid. Take number one, okay? The number one highest paid CEO in the United States. And then you take the list of the top 100 hedge fund managers, rank them by pay. The number one CEO is exactly number 100, the last placed. The last place in the top 100 hedge fund managers would be the highest paid chief executive officer of a major multinational corporation that's trading publicly. Ciao! Including stock options and such. That's full compensation. So put it this way. Do you think these other 99 hedge fund managers want to give up control and just have robots do everything? No. Not quite yet. I've only seen like three episodes of Billions, but it was great. There was one, because I only watch them on airplanes, but there's one where this guy, his fund has been driven into the ground and he's liquidating and all that kind of stuff. And he meets with the main character. They're talking about it. And I think the main character is going to offer him a job or something. But anyways, he's like, man, I'm crushed, right? And the lead guy says to him, well, how much money do you still got? And he's like only 180 million. And they're talking about like how you can't live on that. And he's like, oh, you're going to have to sell the summer house. Your wife is going to have to quit all the foundations and boards that she sits on. So she's going to lose all her family or all her friends. And so you'll probably end up losing your wife and all this other stuff. And he's like, I only have 180 million left. I only have 180 million. You know, yeah. So when are they going to give that up? That ain't going to happen soon, right? There's always going to be a human element. And the reason for it is someone with money doesn't make those investments like handing over wealth to an advisor. They don't do it purely out of logic. They don't do it like they're shopping for socks or something. They invest into a person because they trust them, because they like them, because they admire them, whatever. Okay? So as long as that's still around, which I think will be a while, you should become a professional Forex trader. Okay? So anyways, how do you fold your trades or take profit based on a fib end? No, you're not going to, Kenny, you don't get out of a trade because of a fib per se. you're going to want price action for that. So, and it's typically price action on tactics prevent you from getting in and out of a trade, or if you enter a trade, okay, like let's say this, if this is on a 5-minute, you know, as soon as you get the lower low, lower high scenario, that'll probably take you out. But your strategy is probably on a higher time frame, or is on a higher time frame, like a 4-hour, right? So one will take you out of sort of a piss poor entry or a market that changed for some reason you didn't identify the high. But you should get out more of a when your strategy fails. This will like tell you to stop trading in the moment, and then later, if your strategy fails, technical analysis will tell you that. You wouldn't do it simply because of a fib. See, fibs are basically entries and exits, right? A fib will do something like put you in, take you out. And that's just tactics. So if you're going to use a fib to get in and out, you're basically scalping. You basically have a spot trade. You're in the trade for less than 4 hours, so it's just a pissy little 30 pip trade, right? But it wouldn't have any real strategy behind it. It'd just be picking up some pennies. Okay. But yeah, if you entered here and it's 786 on you, yeah, well, that's also, again, different because the price action's changed. And you obviously missed something on a higher time frame for that to happen. Buenos dias. Okay. Anyways, let's zoom in on this. This is the 1 hour on the pig. Okay. Didn't we talk about this just yesterday? We already have this marked as a bear zone. We talked about this yesterday as being a bull zone. This is plan A for bulls. This is plan B for bulls. Has anything really changed? This was plan A. And plan B. Has anything changed for bulls? No. Worked out really nice, tickety-boo, great. And now what? Is anything, this is a sell zone. Okay. I look at that like, well, nothing's changed. There's nothing really to talk about, right? Actually, I'm both. I absolutely love technical analysis, and I love fundamentals. I think I'm actually pretty good at fundamentals. But yeah, anyways, that's that. Hang on, what was that buzz? All right, cool. Yeah, love it. Love fundamentals. Oh my gosh, how could you be a professional trader and not understand fundamentals, right? Cool. Let's move over here. Dollar week. I love this weak dollar though, huh? This dip obviously confuses things, but you know overall I want a weak dollar because that's positive for the U.S. economy. That shows Americans are filthy, stinking rich. And I keep saying, like, even on these down dips, when I go shopping, right, like poor people have 75-inch TVs in their basket at Sam's Club, right? You're like, dude, you're missing a front tooth. I love your camo this morning. Is that the same as yesterday? And at least your hat matches your jacket. I mean, that's nice. That should fit in your 1992 Dodge Caravan, right? 75-inch 4K TV. right? But you're just like, whoa, people are doing well in America. Okay? People are doing real nice in America. And you'll see a weak dollar that represents that. We're also very close to a big double top in the stock market. So anyway, so that's interesting. So this is the counter trend trade we talked about here. Yesterday we talked about it, and the target is this. So I don't know what you want to do once we get up there, but it looks like we can, oops, I'm trying to get this straight here. There you go. We could probably hit this, right? Doesn't this look like the ultimate top? And then you look at it and it's actually the weekly target based on this. Yeah, so we could probably get up there. And after that, I don't know, man. So you should think about it now. What are you going to do? First of all, it can do this, but it'll probably do this. What are you going to do then? If it starts coming down here or here, the stock market's going to be coming down as well. Yeah, Jim, I shouldn't focus so much on the missing tooth. I should focus on the one he's still got, right? Hey, easier to floss, I say. I haven't slapped the base. Not yet. Yeah, Pedro, you can add or you can just drop a stop underneath it. So let's say you have, so in this case, let's do the reverse. Typically, there's a plan A. Here's a plan B. You're a bear, okay? So the question is, if you sell plan A and it fails, do you add another one on plan B? You totally can. So this is all, it's all the same thing. It just depends on how you skin your rabbit, so to speak. You could put one big lot here and put your stop here and then just calculate your risk, including that, right? Or you take a half a lot. Oops, I didn't mean to do that. Or you take a half a lot, you put one here, okay, and put the other half there. Or, let's clear it. Let's do it one more time. You take the first shot, let's say a half a lot again. If it fails, it knocks you out. And then you take a shot here if you get the setup. But you consider it essentially the same trade. Okay. Right? So there's, I don't know, 3, 4, 5 different ways of trading that. What is the main time charts that I use? 4 hour, 1 hour, love the 15, and then the 5 and a 1. Well, I look at the 4 hour, but look, I have like 60 minutes with you guys per day. How many trades are going to set up in that 60-minute window? Bear in mind, like even if we're using a 5-minute chart, right? You got 5, 10, 15, 20, 25, 30, 35, 40, 45, 50, 55, 60, 65, 70, 75, 80, 85, right? Like a lot of trades take like 90 minutes, even if you're set for it to reverse, right? So for me to sit on a 5-minute chart, I would have to look at one trade, one currency pair, and probably not have enough time to set it up properly, right? Because even if this is resistance, I need the lower low, lower high. And on a 5-minute chart, that could take, let's say, 90 minutes. Unless I happen to be right here, but happen to be right here during that window is incredibly low. So most of what I teach you is the strategy part, right? Where bears live, for example. And if you know that, maybe you can set up a bearish trade. Or where bulls live and why there's a counter trend. So we focus a lot on strategy, but strategy comes off of a 4 hour. And once you decide like, oh, I might want to be a bear here, that's tactics. Now I teach you tactics as well, but you have to be at the exact right place at the right time for it to set up. And for that to also occur during our 60-minute window, that's not likely, right? Highlander says, would a failed plan A be called a false breakout? No. A fake out is something like you're in a channel, it goes okay. The most common fake out is like okay, don't look at any of these candles, but it's when you get a move like this, you call that a flag pattern, right? And then it goes like this. Okay, so when you do like a flag pattern or a wedge, the closer to the apex you get before the move, the more confident you can be. If it happens before the apex of the triangle, then it's more likely to be a fake out than a breakout. So this is not this is a riskier move, and this is the one you're looking for. Okay, so that would be a fake out. That plan A failing is just there's not enough bears there. I mean, this is bearish, technically speaking. Okay, technically speaking, that's bearish for a multitude of reasons, and so is this. Oops. Okay. So if you are a bear, you must sell one of those too. If you get a reversal pattern up here and you're not selling, you don't have a trade plan and you're barely a bear. I mean, my gosh, if you're a bear and you don't sell one of those, I just don't understand. There must not be any reasoning behind the trading. Those by definition, monthly central pivot, weekly R1 on a counter trend. Like we knew this back here. Our trade plan was if you're up here, look for a reversal. We knew that here. What is this, a week and a half ago? 2 weeks ago? That's 2 weeks ago. Right? So there's a high probability this acts as resistance. But if that don't work, this will. Why? Well, it's a double top, and that's the projected move from here to here. I mean, we knew that on Monday, that if you're a buyer here, we're going here. So it's all very definitional. None of this is opinion. If you're a bear and you see a reversal pattern here, or if you're a bear and you see a reversal pattern here, you better short it. Otherwise, you're not a bear or you don't know what you're doing. Right? Right. Bear, absolutely. And I'm not saying that's you, Highlander. Right? I know you know how to trade, Mickey. But I gotta make that point for everybody else, right? Like, we knew this yesterday. We knew this last week. We knew this the week before. That you should look for bears here and possibly enter a bearish trade. Now, I want the dollar to weaken. So I want euro dollar to go up. If that doesn't, nobody cares about what I want. That's resistance. It is. It's just factual. Nothing about the FOMC tomorrow. The only thing, and I talked about this yesterday as well, you should look at Jerome Powell making a mistake. I think that would be the biggest thing. Did you see Dudley yesterday? William Dudley? He said, we're not going to do anything. Or he used to be a big shot on the FOMC. Anyways, he's like, nothing's going to happen till June. So if Powell can just be clear enough, if he could just come out and say, hey, nothing's going to happen till June, and even then probably nothing will happen. Stock market's going to rally, we'll make a new higher high. But my guess is he's going to bumble it up. Okay? He'll bumble it up, and that'll be the more interesting part. Okay? So we'll see. Cool. Plan A, plan B. Awesome. Aussie. Okay. Aussie. doing its thing. It opened out of position. It was supposed to hit its target early, which it hasn't. I'd say if it popped up here, you should look for the retracement. And by Friday, we'll be back here. So today's Tuesday, right? So if we do this today, we'll be here by Friday. Well, I got a question about what's my opinion on the yen. Based on macroeconomics, I would hope yen weakness, but I don't think we're going to see massive yen weakness until September. In the meantime, I'm more apt to be neutral or, well, I should have said yen pairs. I want to make that clear. Yen pairs should be weak in September. So this sort of for the next 4 weeks, I would look for Japanese yen strength, which means yen pairs down. So now I look at the S&P 500 double topping, rolling over. Maybe something silly is said tomorrow, freaks the stock market out. Everyone bails on their double top, and we ride a drop in yen pairs for the next 4 weeks into Japanese fiscal year end. How about that? Is that specific enough? Mubarak? Is that right? Time to mortgage defaults at 25%. Time to start buying. Is that right? Melbourne's nice. It's too cold though, right? So what about like in Queensland or Sydney? Be nice to go into Sydney, huh? And buy a penthouse with a view of the water. Oh man, catch a 30% discount. That might be interesting. Is it really that bad there, huh? That's interesting. That's, I guess, a lot of people losing finance jobs. Well, don't keep an eye on yen pairs per se. Try to figure out what I said and then do your research. Okay? Don't ever listen to somebody's opinion. People are stupid. Don't listen to their opinions. So you can get their point of view and you're like, okay, I get what he's saying. So I'm going to go do some research and see if I agree with that. Okay? But be independent. Don't listen to anybody's research, anybody's opinion. All right, USD Swiss franc. This was a Friday front run. So their target's here, and you see there's a monthly in there as well. Where would a bull need to live? A bull should have bought here, so it doesn't seem there's many bulls. Unless they were trying to stretch out and catch this monthly. It doesn't really look like it, though. So, again, continued dollar weakness. And it's a U.S. play, not a Swissy play. Okay. Today is gonna be the day I'm gonna be back to you. By now, should somehow realize what you got to do. Today is a very big rites of passage day for me. You know, you have those moments in time that you are doing something that is sort of like you're supposed to do. And it's part of being who you are and of your time. It's kind of cool. So today, I'm having one of those father moments where I am picking up my daughter from her school, driving her to an orthodontist, and she's getting braces. Wow, huh? Is that cool? Taking your daughter to get braces. Wow. Daddy-daughter dentist, yeah. Very interesting. Very interesting day. There are so many things that I'd like to say to you. Definitely a moment in time, right? So let me ask you, do professional traders that trade the beast do they use monthly pivots? This one seemed to be important. This one seemed to be important. This one seemed to be important. Right on, Gary. Oh, yeah, she's excited for the braces. Yeah. Oh, she's excited. So anyways, what I'm trying to get to is, you know, you need to, over time, build your confidence. Right? You got to build your confidence in these tools so that you, not just intellectually, but emotionally, believe your analysis. Pretty wicked awesome. So this is climbing. If it breaks out and climbs further, we already know, and we knew 3 weeks ago what the top would be. Let me remind you. It's right here. The conservative top. How do I do this? 151.62. So let's just call it 151.50. There's our target, yo. If this continues, now we don't know if it's going to continue. This is a top and it's an M3. This is where bears live. But bulls have been in control, so it's pretty reasonable to believe that eventually we do this. It's going to be an up, a down, and an up. Okay? But it seems pretty reasonable if you're a bull to think that it's going to go up, down, up, down, up, down, up, out. You're done for March. Now, what we've been saying, though, is in the next 2 weeks, okay, in the next 2 weeks, there might be a storm brewing, and it gives us this instead. Okay. That's quite likely, actually. But that's sort of like your plan A. The storm might hit here. It might stay a beautiful day, and then wham, right? Wham, it hits you April 1st. So we don't know, right? You can assume, like, okay, you live on a Caribbean island. Are you going to be hit by a hurricane this year? Well, you don't know. So I'll change the question. You live on a Caribbean island. Will there be hurricanes in the Caribbean this year? Yes. More than one? Yes. More than 5? Most likely. Between 5 and 10? Yeah, could be. Are they going to hit your island? You don't know. So should you prepare? Should you prepare? Should you have a plan? Should you watch the weather and do analysis of whether you should hunker down or evacuate? Well, it's the same thing. Like, will you be hit by a hurricane? Well, it could hit you here. It could hit you here. So if or when we get to those levels, I'm going to pay attention. Okay? See what I mean? There are so many things I'd like to say to you. Let's do Kiwi. Hey, we're going to ban guns and Facebook. That'll do it. If guns and Facebook go away, the world will be peaceful. Uh-huh. St. Lucia? Very nice. I might be in the Caribbean. I might be. I'm trying. I might be in the Caribbean soon. It's so hard with school. I can't do anything. St. Lucia's nice though. By now you should have somehow. So it's just hanging out doing nothing. We're still on the sell pivot, as you can see. So this is still a huge sell zone. Oops, I got to change my colors. Hang on. We'll do blue this time. So this is still a sell zone. There's no way you would buy it here. So you either walk away and leave it alone, or you start selling lower highs. Okay. As it may be. So now you can start creating contingency plans. Remember, if the stock market starts to come down, and maybe it has to do with the meeting tomorrow, this one's likely to go before the other ones because the other ones still look fairly bullish. Well, this has been bullish. Well, it's been at resistance and it's been neutral. So it may be easier to bring down than the other ones, is all I'm saying. Why, you got some bad weather out there, Gary? St. Lucia's in the Eastern Caribbean, isn't it? Philippines. All right. This is not what I want. Okay. Now, how do you like my WTI? We were talking about a buy here. We were talking about a buy here. We were talking about a buy here. Remember this one? Baby. This was we talked about this on Monday. It was the breakout pullback. You're welcome. Yeah, I might have to go back out and meet with the Eastern Caribbean Central Bank in St. Kitts. Well, Mickey, why would it? Right? Separate news from fundamentals. What would make the value of the New Zealand dollar go up or down? And anybody can comment, by the way. Come on. What makes a currency change in value? Anybody? Thank you for subscribing. Come on, guys. What makes a currency change in value? I don't think my chat's updating. No one's answering that? 142 people. No one? No. Any currency. Change in supply and demand. Bad inflation. No. Most of you guys are way off. It's amazing. Money has to cross a border. No, it's not the interest rate. Interest rates can influence whether money crosses a border, but money physically has to cross a border. A foreign currency has to be exchanged. Not inflation, not big banks, no. Someone has to either demand the Kiwi dollar or dump their Kiwi dollar for something else. But it's not interest rates, it's not inflation, no. That's economic data. Yes, high interest rates can attract or repel investment, but money has to cross a border and be exchanged. And again, it's not the interest rate, it's not the exchange rate, it's not even fundamentals. Literally, money has to cross a border, guys. So, there's a mass shooting. Horrific. And you've been working the last 2 years on $1 billion investment in New Zealand. What's the likelihood you say, forget it, deal's off, and you walk? What's the likelihood you say, forget it, it's over, ain't gonna happen, I'm walking, and that's that? Or you're what's another great example? You're a billionaire and you have $1 billion New Zealand dollars. There's a mass shooting and you said, that's it, I'm leaving. You sell your house, You take your billion Kiwi dollars, you convert them to Hong Kong dollars, and you move to Hong Kong. What's the likelihood that's going to happen? Because of the mass shooting. Like, yeah, it doesn't affect anything. Is it bad socially? Yes. But what's the economic impact directly of that? None. What's the economic impact of North Korea shooting a missile over top of Japan? Ooh, nobody likes that. There'll be lots of governments shaking their fingers. And of course, now that they have a deal with the United States, oh my God, we're going to have to freak out. They're going to talk about it on Fox News forever. Right? Then you switch over to CNBC and they'll say it's because Trump screwed up the summit. And they'll blah, 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 but nothing will actually happen. If North Korea fired a missile and it landed in Japan, now we got an economic problem. Okay, now markets are going to move. Okay, so you always have to think about, like, pretend you're a billionaire investor. You have many, many billions. You have many, many, many billions that you manage and oversee. And you got a lot of money invested into whatever economy you're thinking about. So there's a mass shooting there. There's something else goes over on in some other country. Think about it this way. Is it enough to make you move your billions? And by the way, it took you 5 to 10 years to make the investment. Is it enough to dump it and pull the plug? It's going to take a lot for you to dump it and pull the plug. Okay. Yeah. That's right. It's all about the money flow. That's what the foreign exchange is. You just nailed it. That's what it is. Will it change? Will it change the direction of the river? Right? Is the drought bad enough the river runs dry? You know? Is the flooding so much that the river's going to run its banks? These are kind of the things that happen from time to time but are not likely. So anyways, take the analogy as far as you want. CAD, USD CAD. Okay. So what do you want? What's your plan? See, you have to ask yourself, what's the trend? Of course, if I said it in proper English, what you ask yourself what the trend is. Oh, I forgot it's this way. Oh, I forgot how awesome this is. Insert. Let me do this again. Channel linear regression. It's this way, isn't it? Oh, it's so hot. I love this so much. Nice. That's so hot. It's so hot. Oh, I don't want a new one. I want to extend the old one. There it is. That's so hot. That's nice. So you have to look at this like a scatter plot is really what it is. And it's measuring the average or the mean or median. And then the deviation, a standard deviation. So anyways, it's pretty interesting. I do z-scores next, which I think is just another standard deviation measure, but we'll see. That's right, Mike. River never ends. That always makes me think of Siddhartha. Has anyone studied Gautam Buddha, where he sits by the Ganges, listening to the river laughing? I love that. Every time I see a little creek or I'm by a river, I think of the river laughing. Oh, my pleasure. Thank you for being a subscriber. Yeah, it's a wonderful book. Go ahead and take another look at gold. Yeah, I really do. There are so many things. Just looking at this. I don't think we need to change anything. Does anyone remember the target that we set 3 weeks ago? 3 weeks ago, do you remember what our target was? Today's gonna be the day. I'm gonna throw it back to you. Stop by now, show me somehow. Well, let me remind you just in case. I don't believe there's anybody feels the way I do about you now. Right there. 3 weeks ago. We talked about it here. We talked about needing a double bottom. Then we got a double bottom. Then we talked about needing a higher high. Then we got a higher high. Then we talked about getting a higher low off of a roll reversal, which we got there. Then we got a new high. Then we got a reset. We know the target's here. So what do we need this week to hit that target? You need an entry somewhere around here when the market opens on Sunday. I mean, it's just been sickening straightforward, huh? I'd say there's 1, 2, 3, 4 entries maybe. Yeah, it's just gorgeous. But again, like here's the monthly central. So now that after we concluded this week, which is an M2 to M4 week, look at this perfect week. It's just sick. It's just sick. It's so straightforward. Off of the roll reversal, like it just doesn't get any easier. Hits the exact target and then collapses. But if your hypotheses were going here, then when these new pivots were created at this moment in time, you'd say, well, for that to happen, I need an entry right around this price. And the market opened right at that price. And you're like, yep, that's where we're going. And it's just double bottom, higher high, higher low, perfect entry, M2, M4, perfect exit, and now perfect entry, maybe up to a perfect exit. I don't know, but still, it's the plan, right? We never know, no matter how perfect it is, that's the plan. But this predicts this, this predicts this, this predicts this, this predicts the off, and this is the new up based on the reverse engineering. If we're going here, you need an M2. Oh, look, there's the M2. It's like, it's so there. It's just so there. It's just there. It's there. Like, it's so there. Right? So if you're a bull on gold, it's just price action, I guess, with some pivot points. I mean, that's it, right? Said maybe. Okay, so the entry was Sunday or yesterday. Now, the bears have missed their chance, right? Remember, we talked about this. If you were a bear, this would be your moment of shining glory. But if they don't get there, you're going to get a move like that. But this is the entry. Really, it's Friday front run, Monday open. I don't even really care which one. Friday front run, Monday open. You can see the Monday open is the most obvious one. And that's why you need to be there. And that's why we have a swing trading group, so that you're aware of this on Friday to be there on Monday to make it happen. But this is the classic one. The 1 is the double bottom. 2, right? So 1 is double bottom. 2 is the higher high. And 3 is the role reversal. Just so unbelievably straightforward. And that we could talk about it probably 4 days in advance. It's just amazing, right? And then go straight M2, M4. It's just so perfect, it's hard to believe, right? Does that make sense? That's out of all the reversal patterns, this one's my favorite. Does anyone recall the secret word to describe this setup? It's the only setup I have that has a secret word associated with it. That's how straightforward this is. Who knows the secret word? Yeah, there's 20 seconds so far delay. Wonder why YouTube would have a delay. What's the big deal? There we go. Jim's got it. If you have no idea why people are typing in hammock, type in a question mark. The answer is hammock. If you answered anything else, you were not there. So I've described this over probably 10 years of this being the most obvious, straightforward, aka favorite, reliable, predictable, tradable reversal pattern there is. And I had a story about it, and somehow a hammock comes into it. The point I'm trying to make here is that this is the one that I teach. This is the one I teach. It's so common and so predictable and so reliable that it's the only one that has a secret name associated with it. So put that in your pipe. Teacup in a hammock. And I'm too tired, too old to tell the story anymore. I'm joking, but it is pretty late, and I gotta go soon. But I just want to make that point. Like, I set that up for you guys. The double bottom 2 or 3 days before the double bottom occurred, and then I told you to get ready. The next opportunity is going to be if it creates a higher high. Then it created a higher high. Then I said, okay, well, now you trade the roll reversal. I identified the roll reversal. I identified the price. I used Fibonacci, and we found the zone. Then the new week came along and created a new pivot point, which is very tradable. I'm sure I would have covered it in the swing trading group, except it was gold, but we may have covered it in the swing trading group. But the M2, M4, once again, is just like, it's so textbook that it's boring. Right? It's like discussing algebra with a mathematician. You're like, oh, I know how to multiply two fractions. Thank you. I'm kind of doing some other stuff over here that's important, you know. It's sort of like M2, M4. It's so early textbook, but it's there, and it's so obvious. It's there, right? So the bigger question is, if you missed all of that, or you saw it in pieces, or you didn't quite get what I said, you're in the right place. Because one day, and hopefully soon, you'll listen to me. You'll listen to me when I'm like, hey, this is a double top. And remember the double bottom? Remember the whole point? Like, we hit the double bottom so early in the month that we were setting it up for the reversal there's so much going on there, but it's all textbook stuff. And even the fact that, so what we're trading, I've got to go back to this. So just so I know that you know what we're talking about. Like, there's so much going on here to know what that means in of itself, not the double bottom, just the hit of the target. Actually, let me change it. To know what this means. If you don't know what that means, there's no way you would have gotten anything else. Because on that day, on the 3rd day of March, we said, oh, here. So if you can't see that coming, right? If you can't see that coming, you can't catch the ball. Your head's turning left and the ball's in the air to your right. There's no way you're going to catch it, right? It's just, you're not looking in the right direction. If you didn't know that on the 3rd day of March, then you wouldn't have gotten any of that. But that's a basic rule. That's straight out of my swing trading course, right? You learn that very early on. That this circumstance means that. Now, the funny thing is, we talked about it then, and we talked about creating a double bottom. Okay, but you have to be thinking about here, otherwise you're not thinking about the double bottom. Then the higher high, higher low, 1, 2, 3 roll reversal. Well, that's the reversal pattern when you expect the market to reverse at the exact price you want it to reverse. And there's M2, M4, M2, M4. So this is a combination, like this whole setup in general is pivot points. Pivot points told you the whole entire market's going to reverse. That's just pivot points. Then you use price. Well, this is a form of price action. And right? And candlestick pattern, but I'll go with the price action. It's really price action because it's like that. If you don't know to sell there, you need to learn price action, right? And then once again, weekly swing. So now you need swing trading, right? Which is a form of pivot point trading. So you simply have to understand how to swing trade and how to use price action. That's all it is. So if you know these two things, again, we don't know if it's going to work, but the planning is super ridiculous easy. This was textbook all the way. So with that being said, we're supposed to be here. And now that I've just done this big whole speech, it's probably going to do that on me. But it can do that. And that's how the world works. I'm sorry. But as far as planning is concerned, that predicts that. Okay? This move here predicts this. This is a reversal pattern at a spot where you were looking for a reversal pattern because you expected the market to reverse because you expected it to go here. Really? Mike, you trade those? Yeah. So funny. I'd never trade stocks. What? I'd never trade stocks like that. Oh. Anyways, so I'm not trying to make you feel stupid if you didn't know all that. And I apologize if I came across that way. What I am trying to do is trying to build confidence. So I'm trying to make you not feel stupid in the sense that it is that predictable. The technical analysis was that straightforward. You can learn this. So there's two ways for you to learn all of that. You can log in here every single day, day after day after day, week after week after week, month after month after month, year after year after year. I'll probably be around. I've been doing this for 15 years. Probably be around, right? So you can just hang with me for 15 years. You'll open an account to Trader's Way, pop some money into there, but you're not paying me any money. So it's basically free. And you will get it. I will teach you. I promise you that. The faster way, of course, is to go to fxbootcamp.com, put money into the machine, and pull out knowledge. There's that way. Either through video training or through live training, someone holding your hand, coaching you. Cool. Either way, I will teach you. Okay? And things like a move like that. Now, the part that gets me upset, actually, emotionally, is like, we talked about this dropping and hitting this, and we talked about it hitting this and meaning that it's going back here, and then talking about the double bottom, and then talking about the higher high, and then talking about the 1, 2, 3, and then and yesterday talking about this and up into here. Like, hopefully I'm helping a lot. I feel like I'm helping a lot. But at some point, you're going to have to do it on your own. Because as you probably have seen, even if I tell you and show you, it's not enough. Telling you and showing you is not enough, is it? You're going to have to learn how to do it yourself. Right, Fed? Hey, that Feddy boy? So tomorrow's going to be interesting. FOMC day. Probably going to lose some volume and volatility. Oh, the geese are here. Oh, the geese are here. You guys hunt geese? I have geese, I have deer. I have a young family of falcons, hawks, owls, eagles, an armadillo lives on my property. Those are all the regulars, and of course squirrels and chipmunks. But anyways, the geese this time of year walking around doing their thing. Well, you don't have to cut the apron strings, Jim, right? But I invite people to try to ponder the tough question where if I set you up on these big moves, and I have been for quite some time, and you still don't do it, then we know the crystal ball or lack of crystal ball isn't the problem, right? So you got to put the crystal ball down. You don't have to cut the apron strings and say, well, I can't trade independently without Wayne. No. You can be here, but you need to do your own analysis, make your own trades, right? Like Brooke seems to be a person that does that really, really well. Where you don't cut the apron strings, but you make your own decisions and you actually take your own decisions and stuff. And I know many people are there, but you got to, yeah. So anyways, thank you for being on my team is what I'm trying to say. And I'll be here tomorrow. Hopefully you will be as well. Please subscribe and please like and please comment. And under the recording of today's video, if you want me to cover any specific currencies, just put that in the comments. Well, there's a difference between basic principle and strategy. Like to me, basic principle is a little more technical. Like what are the basic principles of reversal patterns and in measuring, like we did yesterday, speed of the market and all that kind of stuff, right? So it's even more than that. It's I mean, just knowing how to trade. Like I look at that, like you just need to know how to trade. If you don't, if you thought it was going to keep falling here, you're way off, man. You're way off. And at least you know what to study now. Price action, pivot points. You need to become a swing trader. Okay. So anyways, thank you guys. Peace on earth. May the pips be with you. May our profits be above average. I'll see you tomorrow. Click the Forex.Today logo to become a subscriber, and feel free to watch the other 4,000 videos associated with my work on the Trader's Way, Forex.Today, and FX Bootcamp YouTube channels. Cheers.